Hello and welcome to the Specialist Trading presentation of our weekly stock review for the week ending October 1st, 2010. In today's presentation, what we want to talk about is trading a sideways market. If you notice what we've done this past week, once again, just like the prior week, we've pretty much just been flat. It's been very difficult to find a trend. In fact, if we look at a chart here of the S&P, we see that coming into the week on September 27th up to today, October 1st, we pretty much have gone sideways, even though we did have these rather large down, then coming back up moves, and followed by a day or two later of going back up and then coming back down. If you look at from where we opened on Monday to where we closed on today, Friday, we just had pretty much about a 3 or 4 point move on the S&P, which translates to about 20 to 30 points in the Dow, and that's really it. So it's very difficult to get involved in that trading, but one of the best things about our methodology and our trading strategies is that it kept us out of trouble, and we pretty much did what the market did. We just broke even for the week. So rather than getting whipsawed, as I know a lot of traders have this week, and try to call a long play or a short play and wind up losing money by getting stopped out, we basically, our picks broke even. So we're going to go into that, but before we do, we ask that you take a moment to view our disclaimer. I'm going to show you the performance results from this past week trading and all the signals we posted. But remember, we can in no way guarantee that any of the results I'm about to show you will be repeated. So please take a moment to view our disclaimer, and then we shall begin this week's stock review. All right, let's start out with the stock positions that were initiated this week. And as I said, this was a rather quiet week because of the sideways action. So this is one of the great things about our proprietary strategies. They not only get us in a trend when something has started, but they also keep us out of trouble when nothing is happening. Remember, a flat market, a sideways market, is very difficult to trade. This is where people mostly lose money, in these very quiet sideways markets. So we're looking always for a trend, whether it be up or down. We're going to trade the movement of the market. So we only had 3 actual positions that were initiated this week. Well, all the stocks that we posted for you. Here's our first trade. This was an EOG using strategy number 4. Now we got a short signal on the 27th to go short on the 28th. Remember, this was posted each night on our weekly signals page, or I should say daily signals page. We went short on the 28th at 91.18, and using our proprietary method of moving our stop down to unchanged, we basically broke even on the trade. So you're going to see how this suggestion, remember this is not a rule, but this suggestion of moving your stop to unchanged is what helped us stay out of trouble. So basically we didn't win or lose anything on the trade, minus commission costs, but we just broke even in EOG. Let's go over the trade here. This is EOG, a daily chart. Now the first thing we always ask ourselves, as with all of our strategies, is where is price in relation to the buy-sell line? Remember, our buy-sell line is simply the 50-period simple moving average. And as you can see, coming into the trade, price is below. So this automatically tells us that we're only going to be looking to go short. In other words, we can never go long if price is above. We can never go short, we can never go short if price is above. We can never go long if price is below. So since price is below coming into the trade, we're only looking to go short. All right? So following the rules based on strategy number 4, we find our setup bar right here, circled in blue. All right, this is our setup bar. Now, this does not mean we're going to go short at the market, or this is where we get into the trade. This just means it's a setup bar. We have to have a trigger to go short, meaning that we have to trade below the low of the setup bar in order to get short. All right, now if you're not familiar with how you determine a setup bar, simply go to our video learning section where we explain all the rules to all of our strategies, okay? But this is our setup bar. All right, so we want to go short if we trade on the next day and the next day only just below the setup bar. And as you can see, we did. We traded right below, so we got short at 91.18. We place our stop just above the high of the setup bar, and this is our exit here as we calculate our exit level, roughly around 89.5. So you simply place an open order to cover your short position at 89.5, and you place an open order at your stop roughly here around 93 level. All right, so you're just kind of sitting back and waiting. But here's one of the things that we suggest, and this is not a rule, this is just something that you can use in your money management if you're trading more conservatively. This is our exit level down here. What we've noticed many times is once things start to go your direction, if you reach 70% of that exit level, what we suggest is to move your stop down to unchanged. Because as you can see, many times we get that right down to that 70% and look what happens. We turn around and get stopped out and the trend changes. So what we're suggesting, once again, this is not a rule because this does not happen each and every time. Many times it'll come right back up to unchanged and then go in the direction you originally wanted it to go. But if you're playing conservatively, especially in these sideways markets, we would suggest moving the stop down to unchanged, which is exactly what we did. Once we saw that we came down to that 70%, during the same day that we got short, we moved our stop back down to 91.18. Okay? And so we broke even on the trade. And it was the right thing to do because look what happened the very next day. We went straight up, and you would have gotten, had you left your stop in there, you would have got stopped out at 92.98 and lost basically a couple of points on the trade. Now, here's one of the things that is commonly asked. A lot of people say, well, Steve, I don't have the luxury of being in front of my computer all day. And so many times, as in this situation, I wouldn't have seen intraday that we came down to 70% and wouldn't have been able to lower my stop. And looking at the subsequent chart, that on that day, you would have thought that you missed it. Well, sometimes you would and sometimes you won't. As you see here, had you just said, I'm going to move my stop down, look what happened. The very next day, as you see here, you would have actually covered and covered at a better price on the opening, roughly around the 91 levels. You picked up an extra 20 cents profit. So many times, sure, many times you'll miss things by not being in front of your computer all day, but other times you won't. So it pretty much is a wash. Sometimes, it pays to be in front of your computer all day, sometimes you can't. But often during the day, if you can run a quick glance, you can see if you've reached that level, that predetermined 70%, you can just lower your stop and make a phone call or go online. All right, so this was our first trade of the week. We basically just broke even. Our second trade was in OKE, once again using strategy number 4. On the 28th, we went short from a signal we posted on the 27th to go short at 44.47. We exited that same day, once again, at 43.99, so picked up a quick half point. Now, I know a lot of the students, especially the new students, will say, I noticed that strategy number 4 is a great strategy. It works very well, but oftentimes, I'm just making 50 cents, 75 cents. Remember, that's the personality of strategy number 4. It's designed to capture quick momentum moves. We're not looking for 3, 4, 5-point gains. We're looking for anywhere from 25 cents to 75 cents. It's specifically designed for day traders because oftentimes you'll see you're in and out of strategy number 4 the same day. On average, most of the trades last from 1 to 3 days. If you're looking for longer trades, swing trades, or longer term moves, stick to strategies number 1, 2, and 3. Okay? Now, remember, if you're not familiar with these strategies, go to our video learning section. All of the strategies are outlined with all of the rules, very simple and easy to figure out. Okay, once again, we ask ourselves, looking at the chart OKE, where is price in relation to the buy-sell line? Price is below, so this means we're only going to look for a short setup. All right. Now, if we follow along, we see that this bar circled in blue here is our setup bar. So this is the bar that we're going to go use as our benchmark to go short if we trade below. As you can see, the next day we opened a little higher and traded below, so we went short at 44.47. Placed our stop above the high of the setup bar, and then we measured and came up with our calculation for our exit level, which came out to 43.99. Once again, all of this is explained where to come up with your exit level on the video learning section, video under strategy number 4. Okay, so our exit was at 43.99, and so you simply, once you enter the trade, you actually know where these numbers are prior to the trade. You know where to enter, you know where to place your stop, you know everything prior to the trade. Plus, we posted all there for you anyway, so you just have to see where all the postings are. We give you all the numbers. So you would have been informed the night before where to place all these orders. And once you got filled, you entered your exit number there, your exit order, and you see later on in the day you got filled at 43.99. And it's really amazing how so many times we come right to these levels and then change direction. This is once again the beauty of strategy number 4. We're only trying to capture that quick momentum move, which in this case was to the downside. Once you got filled, okay, on this stock, you're out of the trade, and look what happened for the next 3 days. Continued to go up, so it was a really quick, nice momentum move to the downside. So this was actually our winner for the week. We only had 3 trades. One broke even, one had a profit. This trade, our next trade, our last trade for the week, was an HCP. Now this was our loser of the week. This was a combination of three strategies. Strategies number 1, 3, and 4. So all three of these strategies were giving you buy signals. Let's look at this through strategy number 3. Now, let's say we wanted to be in this trade a lot longer. It didn't work out because we got stopped out. As I said, this was our loser of the week, but this was our only long signal that we executed of the week. We went long on the 30th at 36.17 and got stopped out today, Friday, at 35.47. So we lost 70 cents on this particular trade. As we see here with strategy number 3, we incorporate our proprietary Bollinger Band setup. If you need to know how to set up that on the Bollinger Band, it's very simple and basic. Once again, go to the video learning section and look under the video entitled Indicators and Settings, and we explained to you how to set up this Bollinger Band, because this gives you all the calculations, and plus it tells you how to determine where the setup bar is going to be. Now, as you see here, if we look, we had actually two setup bars. Here, this was our first setup bar, circled in blue. So we wanted to go long if we traded above it, but we never did. So all the rules are still in place. So now this is our setup bar, the second bar here. So if we went long, if we traded one tick above, we would be going long. And as you can see, we did on the opening of the next day. We went long at 36.17. We placed our stop right here using stop placement number 1. And nothing really much ever happened to the trade. As you can see, we went up a little bit, but then kind of closed unchanged. And then today, it looked like things may be moving in our direction with an upward move, but it completely sold off and we got stopped out at 35.47. So this trade never really got going in the first place. So we're out of this trade completely. We lost small, but significant 70 cents in terms of our daily, our weekly trading. And so this pretty much wiped out the gains that we had made on the other